Hello traders, Mark here from Flipside Trading, and it is Sunday morning, December the 6th. Bright and sunny here in Colorado, going to be 60 degrees, so we'll be out on the golf course later today after doing some football with the boys. So fun-filled day ahead, and the things we want to look at is, does it look as bright for the market? So let's see what happens if is the Santa Claus rally really in the offing? We'll take a look at the major indexes and see whether or not they're overbought. And some key stocks to watch next week, right? Some potential setups that are happening that you might be interested in, and we'll take a look at what those trigger points will be, and we'll get right into it. All right, let's go. So the first thing we're going to do, as always, we're going to go to our SPX, which is the cash index for the S&P 500. And if we take a look, what happened last week is we really broke out of this consolidation area right here. You can see it's bounded more or less in this channel, and we're grinding higher, right? You can see that the 8 EMA is serving as fantastic support, and as long as this 3644 area holds, right, which is really this bottom of the top, I should say, of this gap, then basically the uptrend, I would say, is in progress. That also coincides with the 8 EMA, so you really have a confluence kind of support zone there. And and a pullback all the way to 3590, kind of 3600. To me, that would probably be a buy point in the market as well. So we're steadily grinding higher. So the question is, how high can this go? Well, let's take a look at our fibs and our fib extensions, and I think we'll get a pretty good idea. So if we go ahead and add that fib extension from this high to this low, right, the top and the bottom of the channel, and we pull this down, you can see that, remember last week we talked about the 127 being our first target. We hit that. Potentially the market's grinding higher, and this 3730 level seems to be really the next area. And I would also say probably 3750, kind of at the high point, right, the kind of the extended, just because it's that nice round number. So the question is, are all the indexes moving in concert, and do we have kind of correlation between the markets? Are they telling us that whole idea of risk off? So let's take a look at the Nasdaq, and look at the Nasdaq, and we'll take a look at the NDX and look at the cash there. Oh, I'll tell you what. Here we go. So if we take a look at what's happening here, and let's just pull this off. We kind of had the same thing, right? We had the overall break out of this consolidation area here, slowly grinding higher. And of course, if we put the fibs back on this, where is it going to go? So we'll start it up here, and we'll add that fib drawing, and we can get to see that again, right? Just about the same thing, right? We've just over the 127 extension, and we're looking at basically 12750 for the 618. So again, it shows the markets are moving more or less in concert. Again, the 8 EMA, the yellow line here, would be my first area support, and of course this buy area, way down here, if we close this gap, based on this Dragonfly Doji and the 21 EMA, would be where I would probably do some good re-entering and rebuying as I trail stops up, along the 8 EMA, at this juncture. So, and of course, let's take a look real quick at the small caps as well, and we'll take a look at the RUT. And basically, the key thing here is the RUT a little bit different, right? And I'm going to pull this off. I don't think this is relevant anymore. But the RUT, instead, we did break out of resistance here, right here. But we are moving on a much more steeply parabolic, type of exponential curve, which tells me, which tells me there's a little bit more of a potential that we could be nearing the top in the small caps maybe sooner than the other indices. Yep, we're still hugging the 8 EMA. That's key, going forward. We do have a little bit of a larger space here between the 8 EMA and the 21. And we just have a little bit more of a kind of a breakout blow off. So if I see 2 or 3 large candles like this, I would definitely be, kind of curbing the trade that I have, which is a small trade here, in in the IWM, basically, which is the small caps, which if you follow me on Twitter, I'll go ahead and show you. We basically talked about that and alerted you to that right here. Let's see, where was that one? It's December. Here we go. It's gold. Here, right here on December the 4th. Right, we talked about, hey, we're breaking out, and that therefore you should get into this. As we said, we get into this, and it's moving up. Right now, my stop is below this value area here, which is just about underneath the EMA, which is basically 182.50. So I'm going to hope to ride that up a little bit longer and see what happens. So the question is, it doesn't look like we're overbought except for on IWMs, but I always like to go to technicals because I don't want to be subjective when I'm thinking. So I'm going back to the stock charts, and I'm going because they provide this handy dandy indicator, kind of the distance, from the 21 EMA, which is kind of the line that I use to really keep the trend itself alive, and if it's alive, and to make sure that things are going well. And you can see here in the SPX, and if we go to the annotation tools, there's a little horizontal line. This area right here is kind of where we hit these high points, if you will, in getting away from the EMAs. And once we get away from the EMAs, you kind of get this reversion to the mean, right? And this reversion to the mean, usually signals some type of a little bit of a pullback. And you can see that in those cases, we've hit that line and we've pulled back. And you can see here that we have a little more distance. So I think, that grind higher and moving up to, that 67.30 level is definitely within range. The other thing I look at is momentum as well. If I look at momentum here, I'm still underneath this line on momentum and this line on momentum, indicating that potentially I do have, room above to make that happen. So kind of taking the look at the other indexes, let's look at the index as well. Here's the NDX. Let's give that a pop. Looks like you have some unsaved annotations. Oh, yes. Continue unsafe. We don't want to save those. All right. So on the NDX, kind of the same thing, right? We'll go to the horizontal line, and this is kind of, your peak area, in here. Again, you can see that we've had, those touches that then resulted in, some slight pullbacks, here, and here. And again, we have some more room, which kind of fits with the overall dialogue. Looking here as well, you can see that, we're breaking this low level, but we have kind of this peak. So to me, this is kind of almost a breakout in momentum, saying that we could go higher, especially, here in the NDX. And I want to talk more about the NDX. We'll come back to it in a moment. So let's finish off with the Russell. And if we go to the Russell, for some reason that stock chart doesn't have the rut, so we will just go IWM, and we don't need to save those annotations. Now remember, the IWM is, it is kind of showing a little bit of room here. I don't know. This is looking a little steep to me. I guess like I said, just really, really tight stops. The other thing I see here is saying that this is more extended than the others. If you look at momentum, look at momentum back here, and what happened. It looks like we're approaching, maybe say, the top potentially faster than the other markets, at least in the near term. Now, when I say top, I'm talking like a 1 week, 2 week type of a push before a pullback. And I'm not saying a total reversal. I'm just saying a reversion back to the mean before a potential continuation of the trend. So I'm not talking about a reversal of the trend at all. I'm just talking about the normal fluctuations, kind of the step function, up here in the market, especially if you're in a trading perspective of where that comes into play. So there you have it, right? I do think there's a little bit room to grow. I think we will kind of grind. And the question is, where do we think that those things are going to happen? Well, it's not really happening in the FANG stocks. And for that, I'm going to go back to think or swim here real quick. So I want to show you a couple things. So if you take a look at Amazon, and one thing you can see here is that you have to excuse all these other lines. These are kind of some of the daily things I do with day trading with Amazon as well. But if we were to look at the big picture, right, this trend line here, has a number of different touches. So if we can break this trend line, which also kind of, has this confluence with the daily value area, right here in that 32.20 level. If we could break 32.20, your first target would be 32.50. But if you can clear 32.50, well, then I see, kind of moving up to the 3,300, 3,310 level. So I'm really watching Amazon. And the way Amazon works, at least lately, is we're not seeing this long continuation of a trend, right? We're seeing these, kind of fits and starts where it breaks out, like through here, we get this big gap up, we move, all the way up through here, kind of this like a 3-4 day burst. So, from an investment standpoint, I'm not looking to add to Amazon in my long-term portfolios. I'm really looking for a 3 or 4 day burst, kind of up here into this level if we break this trend line. Now, of course, in order to break this trend line, we have this confluence of moving averages. Here you can see the 8, the 21, and the 50. This has to hold. Hopefully, if this holds, it performs kind of a squeeze, right? And price gets compressed, and we pop out. We take a look at, the other FANG stocks. If you look at Apple, real quick, Apple, kind of has this resistance level here, kind of, then up to 126. It really has to clear, 126 if you're looking for a quick scalp, above the high of the day, kind of at a call credit spread of 123, 126 vertical would be work out. Netflix kind of the same way. It's not really moving with the rest of the market, which is telling us that there's growth, in the market, and especially in technology, but it is not with the FANG stock. So the question is, where is it and where has it been? And basically, it's been in the semiconductor space. And you can see here that we broke out kind of out of this consolidation. Wrong drawing tool. Kind of right through here, and really popped up. Now you can see that SMH is really kind of overextended. We'll take a look at that in our stock charts as well to show that. You can see the distance here between, the ADMA and of course the larger distance here between, the 21. So where does that leave us? And that kind of really puts us in, some key areas that, potentially will be growing, and we'll talk about those in 2 seconds. But while we're here, I did want to talk about the Tesla trade. And so look at Tesla. One of the key things that's happened, right? We've had this big boost, right? We had this pop out here, and this is about when the announcement came that they were going to add Tesla to the S&P 500. And it's basically, popped up, and we've had this kind of situation where we're sitting in here around the round number. Now, when they're going to add Tesla to the S&P 500 is December the 21st, which coincides with the December options expiration monthly. What happens is, if you noticed, is that those options really don't lose, if we say, their value, because as you approach kind of these binary dates, such as earnings, the volatility tends to increase. And as the volatility increases, it really, regardless of where delta is and which way the stock is moving, it kind of keeps those option prices up. So one of the areas that they're probably not going to mess with and with the volatility is I look at this, where it broke out in this 517 level, and I have the 21 EMA, I have the value area for the month, is that I'm going to be selling and have sold a small position already. I'm going to be selling put credit spreads down here. So like the 510, 500s, okay, kind of 10 wide, or maybe 505, 500 if you're a little bit more risk averse. And I'm selling those from anywhere from 50 cents to $1. And I'm taking that money, and what I'm doing now is, see this, I'm looking for a breakout here above 600. And I'm going to use that credit that I've taken in order to finance a call credit spread. And that call credit spread is probably going to be something like a 610, 630 again in the December timeframe. And that seems to make sense because if I come back here and take a look at where I'm at from, let's go back to our handy dandy fibs and add a drawing. Come on, hang in there for me. Thank you. And I hang it in here and I pull this down, right? The 127 is pretty much the 630 level. So if we go 610, 630, it gives us a little bit of room, kind of to grow, so it doesn't expire worthless. But I would definitely be taking all this trade off before December 21st. So how I'm managing that is that if I sold the 510, 500 for like 80 cents, I have it set up that I'm taking half of it off at 40 cents, right? I'm not going to be greedy. I'm going to take some profit off, on the way up. And then I'm basically going to look to take the whole trade off at 20 cents. So kind of a scaling out. And I'm really looking for trying to hold, using, this level of support. Let me pull this off to get to the 630 level. You can see here, right? If I got into this trade, my stop, I'd keep it really tight, right here underneath this gap, which is, let's see, underneath this gap, that low is the 582. So that'd be kind of, my line in the sand. So that's what's setting up for Tesla. Now, as we talked about, I'm going to go back to the other trades and talk about some of the other, things we have on the watch list. And to do that, I do want to go to ACP for a moment, just because I like some of the things that it's showing. So one of the areas I really want to look at, is, as we've said before, if we look at the semiconductors in the form of the SMH, ETF, right? We've seen this huge bust up, and we can tell right now that we've reached this level. So I don't want to buy at the top and be left holding the bag, in this area, even though I can see that the SMH has basically outperformed the S&P 500, going through here, kind of in breaking, when breaking this top. It's a little bit too much extended for me for those names. And, I've taken some profits in those names and it's been good, but no one wants to look back in hindsight. We want to make money in the future. So let's focus on that. So I think one of the key areas that we can take a look at where things may be growing is in the software space. So because we look at back to IGV, which is kind of the software ETF, and we can see that we've had a little bit more consolidation, but we could also see that we're really on the verge of a breakout. And so if we're just triggering there, and especially if we can get over that right through here and maintain this trend line up, that this can be really the next area of kind of rotation within the broader technology sector that offers some opportunities. So that's my reasoning to look into the sector. And now let's take a look at some of those names. And one of the first names that I really like is Datadog. Not only does it have a cool name, it's a fantastic stock. It does so many cool things from a technical standpoint into the cloud and how you manage that and how you manage the databases. And you can see right here that we're just, we've set up, we broke this point right here, and we can make this bigger. Let me just pull that off. Right, here we go. We've broken this line right here, so we got an initial trigger. And if we can just really get over here, so I have a small position, but I'm looking to add to it, really once I get above, this line right here. It's kind of in the, in the 102 level. And especially if we get hold above 100, that's one of those key, psychological levels, that we should be moving forward. And you can see that we have the moving averages. There's not a lot of distance there. We have a lot of room, up to here. We've broken this last piece. Momentum is starting to cross zero. So again, this is kind of my trigger, and I think Datadog looks good. And from you could run the fibs on here, but just looking at it, my first target is kind of really this 110 level. So that's what I'm looking at Datadog. Next in the software space, the one that I really like is Teladoc, and let me get off the screen draw here. And Teladoc, they merged with lately, and they kind of digested that merger. And I think it was LVGA. They were the kind of up and coming. I thought they were actually the better play long term, but Teladoc has kind of inserted. But you can see kind of the same things that I'm looking at, right? We're looking at for the hope of a break of this resistance point, get up here, fill this gap at least, and of course then break this area. So you kind of want to look at these standpoints. But if we can get above that, I would hold this in here, and then I would add again at this 210 level, and I think we have some more room to the upside. Breaking this, first initial trigger, right here around 205, that should also break us above the level here, get momentum, back above zero. Again, we can see that from a distance from moving averages, we're really looking to propel, and bounce off. And at the same time, we have how we're performing against the SPX is, right here. We should be able to break that with that trigger. So those are the things I'll be looking at TDOC. Some of the other areas that I think could move, I don't feel as strongly, but there's something that are definitely on my watch list. That would be DocU. And we'll go ahead and skip on those. DocU, the only thing I don't like about DocU is this candle right here on the daily candle, after earnings. So I'm looking for DocU to really kind of, break this earnings piece. And if they do break this earnings level high, I think that's a really good indicator. You can see that we have, momentum moving up. It's performing well, against the SPX, and we're a little bit high here. And maybe that's just kind of a, I like to see this pull back and then push up. But this one, just because the earnings were so prevalent, and also at the same time, we do have these restrictions, the ability to sign documents, especially in the housing and real estate market, which is taking off as an area to look at. And lastly is PayPal. I like this one a little bit better, and the reason is because one, it's in the digital finance space. Two, it's also in the crypto space, right? Now, Square and PayPal are now accepting Bitcoin type currencies to make that forward. Bitcoin is probably going to become more of a prevalent digital currency coming in the future. The best way to play that without all the risk and the kind of vicissitudes that come along with that is still kind of a nascent space. In order to be a little more conservative in risk management, is here in PayPal. And what I'm looking at is if we can go ahead and break this high area right here, then I think that we have a pretty good chance to run one more time higher out of this consolidation area that we see right in here. So those are the kind of the 4 or 5 stocks, right? Tesla, Amazon, Datadog, TDOC, PayPal, and DocU. Take a look at those, watch those triggers. Hopefully that'll help. And hey, have a great week. Enjoy the holiday season, and we'll catch you on the flip side.